Real quickly, you can hear me okay? Everything is good? All right, I'm just gonna take that as a yes. So today we are covering what's known as the 5 C's of credit, and obviously how they impact your business and how it's really so relevant more, I want to say today than it has been in a few years. You know, it's really been something that that you're going to have to consider, especially as you pursue financing for your small business, regardless of the medium from which you intend to secure that financing. All right. So let me start off with my objectives for this presentation slide. I'm a little bit of I like to manage expectations, if that makes any sense. So I just wanted to make sure that we covered exactly what I'd like to cover. All right, first, I always like to start off with a brief overview of the Wilkes University SBDC and SBDCs in general. We've often been referred to as like the best kept secret in terms of resources for folks looking to start a small business, or if you are in business and looking to expand, we're also a great resource for that. Research, incidentally, is one of the things that we offer. Real brief intro to what the 5 C's are. They're up there for your review. We'll obviously go into a lot more detail with them, okay? Cash and capital, real quick housekeeping situation. I usually refer to them as like the same sort of thing. Liquidity is another term for it, but liquidity doesn't start with a C, so it's best to refer to it as cash or capital. Otherwise, I'm kind of betraying the whole 5C situation. And cash flow and capacity is another thing that is used interchangeably. You can't talk about the 5Cs without delving into the folks and the places who really focus on the 5Cs of financing, okay? So we're gonna cover a little bit into that, okay? The documents that are required to facilitate and or substantiate the 5 C's of credit, we'll be mentioning that in tandem with each C, as it were, okay? We're going to talk about why this is important, especially in light of our present circumstances. You'll see that there's going to be an organic tie-in to the first bullet point of who the who is in terms of who's looking at the 5 C's of credit, all right? Oftentimes when you give these presentations, it's a lot to digest when you get right down to it. So I like to also include a few takeaways that I feel are really relevant. Like Joe said, we're going to have a little bit of time for questions and answers. And once we're done with that, or rather, if there are no questions, I'll let you have the rest of the evening to yourselves. All right. So a little bit with regard to the overview of what the Small Business Development Center is. Essentially, what I want to do here is articulate to you how we get our funding, an overview of what we do and what we don't. Okay, so we get our funding from the SBA, Pennsylvania's Department of Community and Economic Development, which is a wing of the Commonwealth that facilitates programming for that very purpose, community and economic development. Sometimes they're grants, sometimes they're loans, sometimes they're educational programs and the like. And of course, Wilkes University helps us with our budget. So essentially, because of these 3 funding partners, and there are other ones, but these are our main ones, because of these 3 funding partners, folks, that's how we're able to provide no cost confidential consulting, as well as training for folks who are looking to start a small business, or again, like I'd mentioned before, folks who are in business but are looking to expand. It's a great resource, and essentially that in a nutshell is what we do. It's a very education-based program, which makes a lot of sense because there are 16 SBDC centers in the Commonwealth, and all of us are housed in college or university settings, virtual as the case may be for right now. It's important to talk about what we don't do. A lot of folks confuse us with the SBA, and the SBA provides loan and grant programs. We do not. We can provide you with assistance in terms of securing or at least pursuing those loan and or grant programs. And normally they are loan programs. The vast majority of what's out there for programs is loan oriented. So there's a payback, but we do not provide the financing. We don't provide anything in the way of grants. A couple of things that we also don't do, we do help folks with business plans and putting together documents. Sometimes they're policies and procedures manuals. Sometimes, it's help with certain documents, but we will not generate them for you. We can help edit, modify, and things like that. But ultimately, things like your business plan is core to you. And that makes sense in my opinion, because quite honestly, who should know your business better than you guys, right? We are broken down, or each SBDC is broken down territory by territory, region by region. And you'll see up here are the 5 counties that we serve in Pennsylvania. All right. So now I just want to go into about the who's and the places that are interested in the whole 5C situation, all right? Really, folks, if somebody is looking to give you money or lend you money in some capacity, folks are going to be looking at the 5 C's of credit, okay? And you'll see here that I've provided you with a couple of examples. So you'll see here that lending institutions, they're pretty much like the founding fathers of the 5 C's. You'll see that with banks and credit unions. And when they do their underwriting process, it all revolves around that 5C process, or the 5 C's of credit. Relatedly, there are economic development organizations. These folks administer loan programs normally funded with government monies, all right? So there are a couple in our area. One is called Metro Action, which is in Scranton, Pennsylvania. And I assume like the crux of everybody here is relatively local to the area. We're in Northeast Pennsylvania, if you didn't know. One is called NEPA Alliance. There's one more central to the state called CEDACOG. And actually, I had worked with that organization, CEDACOG, for the better part of 10 years, okay? And these are folks that utilize monies from the government to lend out to small businesses, all right? And those monies come from the various entities that I've listed here under government programs, okay? So this SBA has 2 programs. One is called the 504, which is facilitated by a lot of these economic development organizations, all right? One is called the 7A, which is facilitated by what we started with, the lending institutions like the banks and the credit unions, all right? And beyond that, of course, if you've been reading the news or if you are aware of the whole pandemic situation, which I'm sure you are, the SBA also has the programs through the Paycheck Protection Program and EIDL, which stands for Economic Injury Disaster Loan Program, right? So EIDL, EIDL. There's also the Economic Development Administration, which is a federal organization, Appalachian Regional Commission. USDA stands for the United States Department of Agriculture, and these entities can offer loan programs that are facilitated, again, through these economic development organizations, normally known as revolving loan funds, all right? For more information, I'm going to leave you with my contact information at the end of this program, and we can discuss them further if you're interested. And of course, beyond these entities, you have your garden variety family and friends, the folks that might be willing to lend you money but might have a payback. You can also sell shares if your company is going to be that complex. That's normally the situation if you're going to establish a C corporation. And there are also angel investors out there. For angel investors, if you're going to go that route, normally it's a situation for folks that are on the brink of establishing a new kind of technology. Let's go on to the 5 C's of credit now. And you know what? If you guys have any questions going forward, just let me know. I'm really cool about audience participation, as it were. And like Joe said, you can always put it into the chat box. So on to the 5 C's of credit, all right? The first one I'm going to start off with is character. It's been said in a variety of ways that the best indicator of the future is the past. And you'll see that with character also. Future actions, future behaviors, future probabilities of success is often predicated on what's done in the past, all right? So things like performance history, experience, or trustworthiness, reliability. From a managerial or a business ownership perspective, one's ability to pivot or shift in times of crises. All these things tie into character when you get right down to it. And from a less business, but maybe more personal perspective, how one goes about managing their affairs. Okay, so things like personal credit and how that looks. That's a great indicator of character. And when you reflect on character, it's important to think about like what you've done, what you've accomplished, and how that is a reflection for your future endeavors. Um, as I mentioned before, earlier in the presentation, I like to tie in to the whole situation of what documents can evidence character, right? So you'll see here that credit reports, your personal credit is a great indicator of character, how you pay things back, how you handle, how you handle your obligations, right? All important with regard to character. Things like letters of support or reference letters, again, articulating somebody that has a history with you and then letting that be a foundation for things of the future, especially if you're looking to start a small business. If you had a situation where, let's just say you're looking at starting a business that's all big into project management, right? And then you have a history of project management and you have like a prior client or somebody who is willing to support you in the way of like a written letter, that's an articulation of how the past helps to inform the present, okay? And this is oftentimes a great strategy when looking at government programs. Personal financial statement is really important. And I believe that I had intended to bring that up for you guys, but a personal financial statement, for all intents and purposes, is an articulation of what you owe and what you own, okay? And on a personal financial statement, what you're going to see is a situation that asks for information like your checking, your savings account, your real estate holdings, and then on the flip side, what your debts are, okay? And that gives lenders and underwriters and folks who come from that realm an idea of how you manage your affairs, how you manage your personal affairs, okay? So I actually have, real quickly, a template of a personal financial statement that I want to share with you guys. And you'll see right here. Sorry, I think I muted myself really quickly there. But can you hear me okay right now? Sorry about that. This is a personal financial statement. The information is pretty salient, right? Your name, how to reach you, what your address is, okay? And this is kind of what I was telling you about. If anybody has a background in like finance or accounting, what you're seeing here is essentially a balance sheet for yourself. Even when you take a look at the top here, there's an as of date, okay? So this is essentially a snapshot in time of what your holdings and what you owe and what you own looks like. The difference between what you owe and what you own is considered your net worth. So just going over here, you'll see here what it's asking you for. Like I mentioned before, cash on hand, savings accounts, other liquid assets, what your life insurance is. Now look here that you only declare what your cash surrender value is, cluing you in that if you have term life insurance, you really don't fill anything in there. It's specifically for whole life. And then of course, what your real estate is. This is just to give you an idea of, to give the lender idea rather, of like what your net worth is going to look like once you take into consideration your liabilities, which is on the right side of this document. What your loan obligations are, what you might have in credit cards, things of that nature. If you have something like unpaid taxes, those are all considered liabilities, all right? And then the rest of the document, the final pages, think of this first page almost like a cover sheet. And then you go into more detail with the following sheets. So like the second page, you say that you have notes payable to others and banks. What does that take into consideration? All right. If you have stocks and bonds to evidence liquidity, what's coming from that? If you have real estate, the various real estate that you own, okay? Unpaid taxes, it's not necessarily when you go for financing that might be a complete deal breaker, but things like that need to be explained, okay? This is something that you should get into the habit of being comfortable filling out, because anytime that you're working with the 5 C's of credit, and anytime that you're working by extension with a lender at a bank or a credit union, you're going to have to figure out and complete a document that looks like this, all right? One thing that I want to call to your attention is that you might want to think twice before signing this document, because oftentimes with these personal financial statements, guys, there is, first off, a statement that you're completing this to the best of your ability, right? To the best of your knowledge. Second off, whoever receives this and signs it, generally they have carte blanche to pull your credit. So if that's something that you're concerned about, you might want to fill it out but not execute it until you are ready to actually submit it, okay? So that's just a little bit about the personal financial statement. Each lender may have their own take on a personal financial statement, but this is one that's done up by the SBA and is generally accepted. And if you are pursuing an SBA program, then it stands to reason you're probably going to be having to fill this out. All right. So anyways, back to my presentation. I just wanted to, do that little tangent of a situation on the personal financial statement, because quite honestly, guys, it's very, very important. Now on to the rest of my presentation. I'm sorry, that's my pug Lola on my screen. The next one that you should see is collateral, all right? And collateral, I mean, it's a pretty simple concept. It's the way that a loan is secured. The majority of banks and other kinds of lending institutions will require some level of collateral. Collateral comes in different ways. It could be real estate, equipment. If you're somebody that has accounts receivable, oftentimes banks will take those accounts receivable as collateral to secure things that are considered short-term borrowing. So like lines of credit, something that you use temporarily or in a pinch, but ultimately you're expected to pay back in a relatively short amount of time. And that relatively short amount of time is 12 months or sooner, all right? Any questions so far? All righty. The 5 C's, documents related to collateral include appraisals, all right? So it's one thing to say that you have the real estate, or the real estate is going to come in at a specific value, but you're going to want something, or the banks will want something to substantiate that value. And normally you'll see that with appraisals. You'll also see that depending on the situation with furniture, fixtures, equipment as well. Sometimes it depends on what you're going to use the borrowing for, right? Because we're discussing the 5 C's of credit relative to financing. And if you're using the financing for like improvements to the real estate, you can get what's called as completed appraisal that takes into consideration the improvements. Maybe it's an footage. Maybe it's significant renovations, and you can take that all into consideration into an appraisal to leverage off of that to substantiate value. All right. Cost documents. If you're looking at purchasing new equipment, used equipment, things of that nature, you're going to want to secure invoices and estimates for the stuff that you're looking to purchase. All right. So this is all related to the documentation, like I said before. Loan documents associated with collateral. These are things that the banks are going to ask you, or other institutions that are going to ask you to execute on if you are pledging them as collateral. If you're a homeowner, then you're probably familiar with the concept of a mortgage, which I'll have for like the next bajillion years of my life. A security agreement articulating how a loan is secured. Usually that's a separate document, and something called a uniform commercial code. And that's normally filed with the Department of State, the Commonwealth in this situation, where it's on public record that you filed specific assets to secure financing, all right? And you'll note that the crux of these documents are public, are available for public review. Like, for example, the mortgage is recorded at the courthouse, and anybody can essentially go to the courthouse. Sometimes actually some courthouses have electronic like ability for folks to look it up, but you can actually look up a mortgage on your house or on anybody that owns property at the courthouse. All right, capital. As I said before, capital and cash, yeah, I'm going to use them interchangeably in addition to liquidity. We're talking about cash on hand. See, this is the thing, folks. Like, when you're looking at financing, most lenders will not finance something 100%, and they'll look at what you have in terms of capital to facilitate the overall request or the total project cost. A lot of bankers, lenders refer to it as skin in the game, as it were, okay? So that's the money that you can contribute to a project. Maybe it's the purchase of real estate, maybe it's equipment. Certainly when you're looking at starting up a business, to be completely honest, that's when cash matters the most, all right? And bankers and other folks that are vested or are willing to invest in your operation want to see that there's an element of capital that you can put towards your business where it can serve as like a cushion for the business as well, all right? So the means to substantiate capital, all right? We had mentioned the personal financial statement. You'll see there that the checking, the savings account, the marketable securities, that's all ways to evidence capital. If you presently have a business, you're going to see something called the balance sheet, where cash is articulated as like the first line item. And like I said before, the personal financial statement is essentially the same thing as the balance sheet, but just on the personal level. Of course, beyond that, there are bank statements that evidence capital, checking and savings, right? Marketable securities, so those statements, investments like stocks. The one thing I would like to mention to you guys is folks oftentimes have a retirement portfolio, right? Like I have one. If you've been working for a while, full-time professional positions, you more likely than not, have a retirement portfolio. And technically that is capital. You're gonna wanna think twice if you're thinking about tapping into that, because there are significant penalties for it. And I would have you weigh the pros and cons with maybe a tax professional or a CPA before, and certainly an investing professional before you really take that under consideration. To be completely honest, guys, when I was a lender, I used to be a lender, the SBA doesn't really acknowledge retirement portfolios as a source of liquidity just because of the penalties involved. So while it is an option, I don't consider it the best option. And like I said before, just really be deliberate and really deliberate on that before you decide to tap into it at all. The 5 C's of credit also include the conditions. The conditions for success, when you get right down to it, all right? Are things in place to facilitate that success? Will people actually buy your product or service? Is there like a real demand for it? Okay, these are all things that are inherent when you talk about conditions, okay? What the economy looks like in the industry, all right? And even where you're located. I mean, if you're going to be like if you're going to sell snow shovels, it's like that old but very practical example. Selling snow shovels in Florida, you're probably not going to find like a huge market for it, right? The conditions for success obviously are going to affect your business. And there is an organic tie into character when you think about it. When you're aware of the conditions, when you're aware of what can make or break your business, it's a reflection of your knowledge of your business and helps you to facilitate an explanation with regard to your long-term success. So what are the things that are reflective of conditions rather, documents wise? Well, research is very important. If you've taken the time to research your operation or the industry that suggests that you're knowledgeable. And a little bit of a plug here, guys, that is something that the SBDC can be instrumental with. We have access to databases that can help you with research regarding various market, industry, and demographic situations. We also have access to economic development partners that can help with other things. If you are set on a location, right, when you think about it, your location is a foundation for your success, especially if location visibility is really what I'm talking about, is key to your success. So maybe like with regard to visibility, we can leverage off of traffic patterns and those traffic studies, all right? Something that lenders will also look into for you, and really for them, is environmental reports, all right? Now, it's one thing if it's a great location, but if there's been like hazardous materials being dumped on the site for like 20 years or something like that, that's gonna be like a huge issue in terms of your being able to conduct business, all right? And what banks will require is, depending on the severity, depending on the type of operation you're looking to establish, various types of environmental reporting, some more complex than others, okay? And this is especially relevant if you're looking at purchasing real estate, all right? But like I said before, the environment is definitely, if you think about it, a condition for your success, all right? Environmental reports, I'm not going to beat around the bush, can be really expensive, all right? So if there is a property that you're looking for, you're interested in buying it, it's never a bad idea to make contact with the realtor or the person that presently owns it and ask and research. Like I said before, there is information that you can find at the courthouse that can help influence your decisions and inform things. You have every right to ask about something if you're looking to purchase it, all right? So this is something, it might not be like like a real C of credit, but when you're interested in something and you want to pursue it, in my opinion, there is nothing like that should be off the table in terms of what you should know about what you're looking to purchase, right? And being knowledgeable and being that engaged can help you make a great decision, or it can help you avoid like a really bad one when you get right down to it. All right, guys. And then there is like a fifth C, and that's capacity cash flow, all right? What we're asking here, or what this fifth C is all about, is does your income cover like your expenses and other obligations that you're looking to take out if you're looking at securing financing? Hard to prove when you're a startup, right? So what you leverage off of are things like financial projections. I'll go into that in a little bit. Do you also have, this actually ties into capital, liquidity, cash. Do you have access to that liquidity in the leaner months of the year? This is really applicable, say, if you have a business that's that falls into like a seasonal component, right? So what are some examples of that? Like a greenhouse, for example. Or if you're really, or landscaping, right? Which I guess is kind of related. It's a related industry. Car dealerships are another thing that is subject to a certain amount of seasonality. And then other things to take into consideration, especially if you're starting up. Is there ancillary income? Other things that you can leverage off of to supplement cash flow in the leaner times, or if you're just starting up. Do you have a full-time job? Is there passive income? Things of that nature, right? And all those are relevant situations to the topic of cash flow and capacity. In terms of your, in terms of the ways to substantiate cash flow, all right, like I mentioned before, projections and written assumptions. Normally that includes some sort of breakdown the first year. What does that breakdown show lenders? is that you are aware of the seasonality relative to your operation, okay? So do lenders expect that you're going to be maxing it out every single month? Not necessarily. What they're looking for is an awareness of seasonality to your business, and not only that, but how you're going to handle that seasonality, okay? How you're going to manage your cash. Maybe it's being able to stockpile cash for the leaner months. Maybe it's projecting access to a line of credit to facilitate working capital, things of that nature, right? Where you need to tap into reserve funds in a given year, all right? Other ways to substantiate your cash flow. Tax returns, obviously. Personal, if you're leveraging off of income to supplement. So by that nature, another related document might be pay stubs, okay? Business tax returns are really important. If you're presently in business, you should have business tax returns. Otherwise, you should probably talk to an accountant about that. But business tax returns will also work in your favor if there's a transfer of ownership, because for a lot of folks that are looking to start up, even if the business has been in existence and you're looking to purchase like the business, a lot of lenders will still consider you a startup because you're new to running that business, okay? And a lot of folks predicate everything on management's prowess, which is why character is one of the 5 C's rather. Okay, and then we had mentioned things on the ancillary end of income. So if there's a full-time job, pay stubs, personal tax returns, but let's just say you have other income by way of real estate holdings. Things that can help you out there are lease agreements, right, to substantiate income. That should also show up on tax returns if they're being filed personally. It's called a Schedule E. Some folks will form an LLC to have real estate holdings, okay? This is actually very relevant. Let's just say if you're in a situation where you're looking at purchasing real estate, that's part and parcel of the whole deal if you're purchasing a business. And let's just say that there is income producing potential as a result of that purchase. Let's say there are apartments or something like that on like the second or third floor. Or let's just say it's a situation where you have like the crux of the real estate, but like there's enough for like a mom and pop storefront where they can lease space from you. In that case, existing lease agreements help to substantiate, right, the income that you could be collecting. Especially they're relevant where if it's a relatively new client, so it might not show up on the previous year's tax returns, but you have a lease agreement that suggests maybe like a 5-year term to the lease, implying, of course, right, long-term revenue stream. So that's really, when you get right down to it, the 5 C's of credit. It is a lot to take into consideration, and these folks do look at a bunch of different things. When I say folks, you know, lenders and essentially the people that are looking to give you money, all right? It's normally lenders. They look at everything in total. They might have concessions depending on the purpose of the organization or what really drives them on the importance, the magnitude of one C over another. But for all intents and purposes, they're looking at all 5 C's. And when there is a deficiency in a particular C, that's a situation that you want to address. You want to anticipate and you want to prepare for discussion, because these are the foundations that they use when you get right down to it to make credit decisions. These 5 C's are what can differentiate a loan approval and a loan denial, okay? And let's see here. I thought I missed this. I might have missed a slide. A lot of the focus on the 5 C's of credit, guys, is related to the COVID-19 pandemic, all right? And I can't stress that enough. What you have here is, as a result of the pandemic, a lot of situations where banks' portfolios have been affected. When businesses can no longer be in business because there are government mandates, obviously that's going to have an adverse effect on folks being able to pay their bills, including their loan payments. So banks, as a result, have had to do their share of loan modifications or grace periods and the like. And that has affected, and those are things that have affected their revenue stream. As a result, they have had to work so much harder in establishing guidelines, parameters, right, to lend money going forward. And those parameters are still based on the 5 C's of credit, okay? It's funny because when things go wrong with financial institutions, it's not necessarily a situation where they look to do things more far out there, right? To get real pioneering with things. Rather, oftentimes it tends to be a lot more conservative. So you get back to the roots, you get back to the foundation of what you know, all right? And these 5 C's are essentially the hallmarks by which to establish credit to individuals, to businesses, and the like, all right? With the 5 C's of credit, I would suggest that even if you don't fall into the 5 counties that we serve, all right, that you leverage off of the resources from your local SBDC, because we're able to help with things. And I had touched upon it a little bit with the business plan, pro forma projections, which is one part of projections. The other part is the written assumptions, okay? What and the how of how you derived your financial projections, why you think you're going to make the money that you're going to be making in year 1, year 2, year 3, the first 12 months that you're in business. Like I mentioned before, we also can help with research. And ultimately, this allows you access to important research to help you in presenting for a funding request. Whether, like I said before, normally it's by way of loans, loan programs. Sometimes there are also with grants, okay? And with regard to articulating the 5 C's of credit between the business plan, the pro forma projections, and things that make up what's called an appendix to the business plan. So supporting documents, your personal financial statement, your letters of support, tax returns, if you're looking at purchasing a small business, personal tax returns to evidence, like how you've handled, your finances or the money that you've been able to make. These are all things that are triangulated in such a way so that you can point to acceptable credit worthiness when you get right down to it, okay? In terms of the 5 C's of credit, the one thing, I've been in lending for a while. I actually spent the crux of my career working in various capacities related to credit, to loans. And the one thing that I would say to y'all is the 5 C's of credit are very, very important, but nothing really supports the other situations can fall into place. Somebody with good character may understand the ramifications or the scenarios resulting from borrowing money, and they work that much harder to establish a capital base, all right? Or they work that much harder to make sure that the collateral is there, okay? Or they've worked that much harder to ensure that the research is there, that they've actually covered bases for the conditions of success, all right? And it's articulated, of course, in one's personal financials, namely the credit score, the personal financial statement. And oftentimes what you'll see with lenders is that all of them, like I had mentioned before, some C's are more, hold more weight than other C's. But if somebody is willing to let, say, collateral slide a little bit, okay, where what's called a loan to value ratio doesn't need to be as low, and they're willing to take a little more of a chance in what they're willing to lend to you, they'll make that decision oftentimes based on your character. So that's a little bit about what what we have to offer. I'm at the last slide, everybody. So at this point, it's the questions, the comments, concerns that I'm happy to hear from you guys, and hopefully I'll have answers too.
Oh, it's quiet tonight. If anyone has questions, please feel free to unmute and ask away.
Okay. And honestly, folks, if there are no questions, and oftentimes there is a lot of information when it comes to these presentations, right? And that's totally cool. My contact information is up there. Because of the whole pandemic, I'm much more readily available with emails. So if you're looking to make contact with me, it's best to email me, and then from that we can schedule, things like a phone call or like a Zoom conference call. I've been meeting with folks that way. So, but yeah, thank you for staying for the presentation. I really appreciate it. I'm here, if you have any questions.
I just wanted to take a minute to thank Ray for being here with us this afternoon, and just a few housekeeping notes for everyone. I will be making available the recording of this on the Wilkes University SBDC YouTube channel, and I'll email that link to all attendees so that you have that as a reference. And our next session in this series will be on writing a business plan, which is next Tuesday, January 26th at 5 p.m. And I'll also send a reminder out via email with a Zoom link as well. With that, I want to thank everyone for attending the session. And if you have any questions, please don't hesitate to contact us at the SBDC. And I hope that you have a wonderful rest of your day. And I look forward to seeing you next week. Thanks, everyone.
Bye.
Bye.